Good morning and welcome to the Lynas Rare Earths investor briefing for the quarter ending 30 June 2023. Today's briefing will be presented by Amanda Lacaze, CEO and Managing Director, and joining Amanda are Gaudenz Sturzenegger, CFO, Pol Le Roux, COO, Daniel Havas, VP Strategy and Investor Relations, and Sarah Leonard, General Counsel and Company Secretary. I'll now hand over to Amanda. Please go ahead, Amanda.
Thanks, Jen. Good morning, everybody. So, fourth quarter results, which of course means it's the end of the year. Really pleased that even accommodating for our significant investment in growth, that we have finished the year with just over $1 billion still sitting in cash, which means that our continued growth plans are very secure. So just turning to the quarterly itself, despite really a much lower market price, I think this is a really excellent result driven by our record operational performance. And as we look at that, we really can see the value of the Lynas incumbency in this market and the fact that we have facilities which are in place and which are operating really very efficiently. So just turning to production to start with, 1,864 tonnes for the quarter is a record. It's our second record in a row. As we look at this financial year, which is just passed, in the first 6 months, production was significantly lower as a result of external disruptions to our ability to operate, most specifically the outage caused by the lack of water in Malaysia. The second 6 months of the year shows what we can do when we're not troubled by some of those external factors. And it really was an excellent performance at the LAMP, but also well worth recognising that at Mount Weld we also broke records in terms of concentrate production, with sufficient produced to feed the record production in Malaysia and also to accumulate inventory of concentrate ahead of the start-up of our Kalgoorlie facility. The record production outcomes means that we have been able to secure supply for our major customers ahead of any of the transition challenges that we've covered previously, if and when we are required to move from a sole cracking and leaching facility in Malaysia to operating our cracking and leaching facility in Kalgoorlie. As we look at market conditions and the market prices, we have made a choice that we will now hold additional inventory, once again as safety stock on that, but also because today, with the price where it is, we feel that it's prudent that we hold that inventory for what we believe will be an inevitable uptick in the market as economic conditions, particularly inside China, improve. Major projects are operating on each of our sites. I think we always spend quite a lot of time thinking about Kalgoorlie, of course, because it's such a substantial new facility, but we do have major construction activity occurring on each site. At Kalgoorlie, we are very busy. I was there just over a week ago, and we still have a lot of people on site finalising all the last parts of the plant ahead of our first production. In Mount Weld, we've really broken the back of all of the major earthworks and had some really substantial process as far as, sort of early pours of our early cement pours, and we're actually seeing that expansion starting to take shape on the footprint, So once again, I was out there just a week or so ago, and looking at the site is really very exciting. We've been operating with a very small facility now for a decade, but this is really a significant step up in terms of our processing capability as we move forward. In Kuantan, we often don't really reflect on the scope of the work which is being done as part of the introduction of mixed rare earth carbonate as a feedstock, in addition to the lanthanide concentrate that we feed to Kuantan at present. And that receival facility, we have taken the opportunity to also include some operating enhancements to continue to improve efficiency of the Kuantan site as we move forward, because, as we see with the current price scenario, we need to be able to be successful even when the price is lower. And that's included some enhancements around things like soda ash loading and unloading, as well as a sulfate removal circuit, as well as a new initial solvent extraction circuit, which is going to allow us to continue to drive improvements in site operations. And then finally, everyone will have seen from today's report that we have named the site that we have purchased in Seadrift, Texas. It's just it's in Calhoun County, not far from Victoria. I visited the site some time back. It was previously part of the close by Dow site. And as neighbours, they will be, we believe, an excellent neighbours. They've already shown themselves to be very welcoming, and there are opportunities for us to enhance operation of that site as it's constructed, utilising some shared capabilities with our neighbours. It would not be proper to not reflect on the fact that we're very disappointed that we've had 3 lost time injuries during the quarter, 1 each at Mount Weld, Kalgoorlie and Kuantan. And we really are taking the opportunity to pursue very clearly, initiatives on each site to remind our people that safety must always be prioritised over any of the other deadlines or production outcomes that we're driving to achieve. I'm sure that many would like me to make some comments about the licensing situation in Malaysia as well. Of course, during the quarter, we received the 6-month variation to our existing license, which sees us able to continue to import and process lanthanide concentrate through to the end of this calendar year. You would have also seen that last week we lodged our application for judicial review of the 2 appeals that we had lodged with the MOSTI Minister, and which were heard in April. We believe that these are very strong, and we're pleased that Malaysia offers excellent processes to get proper reviews of these types of decisions, and so we're commencing that process now. But alongside that, and I think much more importantly, we're spending a lot of time aligned with various departments within the government and various leaders within the government to really look at the opportunity to focus on industry development in Malaysia. The development of industries which are based upon rare earths materials is something that is well recognised as value adding for an economy in, well, of course, China, but Japan, the US, Australia, the EU. And I think that, Malaysia and many in Malaysia who may not have put their minds to this so much previously really now understand what this opportunity is for Malaysia and the unique opportunity that having the Lynas processing plant represents. So really focusing on opportunities to enhance the Malaysian economy development as far as rare earths concerned is as important for us as the fact that we have launched those judicial review proceedings last week. So with those as starting comments, I'm very open, of course, once again to questions. Just key points, the most important, I think, is really the operational performance, record production levels at both of our current operating sites gives us great confidence as we look to the future in a market that we believe will continue to grow and will continue to grow not just in terms of demand but also in terms of value. So happy to take questions, or my colleagues Gardens and Daniel and Sarah and Paul are also happy to take questions.
The first question comes from the line of David Deckelbaum from Cowen. Please go ahead.
Good morning, Amanda and team. Thanks for taking the questions this morning.
Hi, David.
Hi there. I just wanted to follow up on some of your prepared comments about stocking inventory. It seems like there's a combination of factors at work here. One just being maybe the timeliness of a weak market that you anticipate getting better, but just two, I'm just curious what your expectation would be, I guess, in the ensuing quarters. Any guidance you can give on how much sales would be impacted relative to where you were in this fourth quarter as you start stocking inventory to sort of maintain volumes for key customers?
It's going to be, it will be noticeable but not really significant. I mean, our key customers continue to have demand, which is, amongst our really sort of key customers, it's at least 75 to 80% of what we produce. And we will continue to do that, but where we might in other circumstances actually allow some inventory build within the various sort of supply pipelines, we feel that it's prudent at this stage to hold those within our own facilities rather than have them sitting in the pipeline.
That makes sense. As my follow-up, I was hoping that you could talk a little bit about just the Kalgoorlie commissioning process and the timeline there. Recognizing, of course, that you're at some final stages, I guess, in finishing construction there, and you did say that this was sort of part of one of the considerations or paths of timelines that you're looking at. So I guess how are you thinking about that progression towards getting to where you want the facility to be going into this next fiscal year?
So I think everybody knows that we always had very challenging timelines on Kalgoorlie, which were quite arbitrary, really, based upon some of those license conditions which were set previously in Malaysia. And our focus has been on ensuring that we have the productive capability, even if we don't have every last bit, like admin buildings and those sorts of things finalised. And we're in a good place as far as that's concerned now. We only have one critical path element left on the project, and that's the waste gas treatment plant. and we're substantially, I mean, like I think 99% complete on structural and mechanical, and we're in the piping and electrical phases of that project now. Because that sits as a separate plant within the area, we are able to complete our commissioning on all other parts of the plant, but we do need that plant finalised before we can start the heat up cycle on the kiln, and we expect that to be within weeks. But we certainly as we said, we're continuing along this path, but as well as that, we need to make sure that we're not putting our people at risk by having too many people working in too small an area, which is basically our comment about, sort of workfront availability.
Thanks, Amanda. I appreciate the answers today.
Terrific. Thanks, David.
Thank you for the questions. One moment for the next question. Next from the line, we have Dim Ariyasinghe from UBS. Please go ahead.
Thanks, Amanda and team, and congrats on the strong operational result. Just a question, maybe following up on David, in terms of the inventory. So, am I right to assume then that we can expect inventory to continue to build while the NdPr or the rare earth price complex is depressed? And maybe if you could just help us with any other considerations, like how much capacity you have available to build in maybe relative terms, and anything on that?
Sure. So, as we said, we have contracted volumes within a number of our key customers, which we will need to continue to serve through this period of time. And with many of those, we have a price adjustment mechanism, which means that if the price does go up, even if we have material sitting in the pipeline, we will be able to adjust for that price. But then we always have had a proportion, which is sitting at around about 20 to maybe 25% of what we produce, which is available for sale, not into the spot market, but we have more demand from non or customers who are contracted but not at assured volumes than we actually sort of supply on an ongoing basis. And we will, as I said, we've made a choice that with some of that we will not supply at the lower prices, but we will hold that material until the price starts to improve.
Yeah, thanks. That makes sense. I guess then just a follow-up question, then I'll maybe rejoin the line. But it sounds like, I sincerely hope it is a question of when, not if. But maybe could you help us in terms of like when you think prices could pick up again? Like, is it the H2 production quota? Maybe help interpreting the tea leaves, please.
Oh, yeah. Well, we all have our inside Lynas. I don't think any of us have ever had consistent winning bets on what's going to happen with the price of rare earths. Having said that, yes, I think that there's much written about the softness inside the Chinese economy, and we do believe that will pick up and there will be additional stimulus into that economy. We also see that the softness actually is it's different across different segments of the market. So we still see, sort of the primary driver of, sort of growth in electric and hybrid vehicles continues. inside China as well as outside, but some of the other applications which can be a little more optional, the rate at which they grow. So things like, yes, there's been a bit of slowing of use in the wind turbine segment, and in things like industrial automation or in China, sort of home applications like new air conditioners and those sorts of things. So really, I think that's going to, as some of those conditions pick up, particularly inside China, we'll see the market price start to pick up. And yes, I think also what happens with the second half production quota will also affect confidence levels in the inside China market.
Okay, cool. Thanks. That's thorough.
I just wish I could give you a crystal ball a forecast which was correct, but I can't. And I think that what our position on this has always been is that the long-term settings of the market remain really very positive, and that we need to be in a position where we can be successful if the market price is low, and we can be very successful if the market price is high.
Understood. Thanks.
Thank you.
Thank you for the questions. Next question comes from the line of Paul Young from Goldman Sachs. Please go ahead.
Morning, Amanda and team. I hope you're well. Amanda, great to see record production from LAMP and also Mount Weld. A question first of all on LAMP, producing a run rate of 7,500 tonnes per annum in the quarter. Have you tested? I'm just curious about what you think the current capacity actually is. Have you tested all the bottlenecks in the refinery? And I guess from a long-term perspective, where do you think you'll take rated capacity to on LAMP as well?
Oh, yeah. So, look, I think that I'm happy for Paul to respond to this as well. And since he's in France and he's got up at 2:00 in the morning, I should probably give him a chance to talk to make it worthwhile getting up. But I got to say, that looking at what the team is able to achieve, and that we did still have some downtime for various pieces of maintenance during the quarter. So, I think that we see that we've got a little bit more that we can achieve out of this. How far we take production at the LAMP, of course, is going to be dependent upon further discussions with the Malaysian government with respect to the licence conditions. To step up production by, we've got an industrial plan for the site, which we have put on hold at this stage as we await some of the decisions on the licence. But certainly we're able to step up production initially by 50% and then by 100% for relatively low cost at the LAMP, given that we have the facility to operate the whole of the plant. But why don't I invite Paul to make some comments, because it's his team that's delivered this outstanding result. Paul, you there? Okay.
Maybe the alarm didn't go off.
Go ahead.
No, he's there. I know. He spoke before.
Thanks, Paul.
Thank you for the questions. One moment for the next question. Yeah, go ahead.
Oh, sorry. I'm still here. Thank you. Sorry, I thought Paul was going to speak. Amanda, he might have some technical difficulties his side. Can I just move on to Mount Weld and the record production there? And I think your rated capacity is, on an all throughput basis, is 240,000 tonne per annum. That's under environmental licence. I think you generally produce give or take, 60,000 tonnes of concentrate per annum, so 15 a quarter. Just to put it in perspective, what does record production mean from our world? Does it mean 25,000 tonnes of concentrate in the quarter?
Look, actually, Paul, I'll need to get Daniel to come back and actually confirm those numbers for you, because I just want to be sure we're talking apples and not apples and oranges, because we tend to think about this just on a contained tonnes basis, a REO contained basis rather than a total throughput. So I'll just get him to come back and do that. Suffice to say that the objective is to make sure that each of our supply stages is aligned, and your point, Paul, which is that can we get it some even further incremental improvements in the lab? We are focused in the same way at Mount Weld to continue to get incremental improvements there. And as we're doing the work on the expansion, we have prioritised the areas where we will be able to improve Mount Weld's operation. So the current bottleneck is the dewatering circuit, and that will be the first part of the expansion that comes on board. So we won't be able to make the jump from the equivalent 600 tonnes to 1,000 tonnes of NdPr per quarter in one go, but we will get some steps up as we actually release some of the bottlenecks.
Yeah, okay, that's great. Obviously, gives you the flexibility, Amanda, if Mount Weld's running well. But I'll chase Daniel on that data. Just last question on this round is just back on Kalgoorlie and the commissioning there. You're commissioning the back end of the circuit on the mixed rare earth carbonate, or concentrate from LAMP. That's good. But just on the front end of the circuit being the kiln, and you mentioned about that commissioning the kiln in September with the waste gas circuit being completed. With respect to the kiln commissioning, do I infer that yes, you're pushing through first high grade ore or Mount Weld concentrate through the kiln in September? I'm just curious about your experiences running the kilns in Malaysia and commissioning there. What sort of typical sort of process or time frame did it take to sort of commission the kilns there and ramp them up?
Yeah, so it's Paul, it's an interesting comparison, but not all that useful. I mean, it's useful, and in fact, we've brought the team down who've already done this. We've got quite a lot of our Malaysian team either already on site or going to be there shortly. But when we think about the heat up cycle for the kiln in Kalgoorlie, it's much shorter than the initial heat up cycle a decade ago in Kuantan. It is more like we see with the way that the plant's been designed, it is more akin to if we take our kilns down, say, for major maintenance or something like that, and they go completely cold in Malaysia, then the heat up cycle that we get after we bring them back up is going to be more like the heat up cycle here. And we're estimating that at some, less than a couple of weeks, where I think the initial heat up cycle in Malaysia took longer than that, but remember there was 4 separate kilns, and we certainly had issues there with specification of materials on that front end, which have been addressed at Kalgoorlie.
Okay, all right, Amanda, thanks very much. I'll leave it there.
Thanks, Paul.
For the questions, one moment for the next questions. Next on the line, we have Regan Burrows from Bell Potter. Please go ahead.
Yeah, thank you. Good morning, Amanda and team. Congratulations on the good result there. Just perhaps leading on from Paul's question before, just so we get the timing right. So just in terms of the first mixed rare earth carbonate production now sort of targeting September. Just
Yeah.
in terms of sort of final production out of the end of the plant, I think last time we spoke, you said roughly 2 weeks to get it up to Malaysia and then another couple of weeks to flow through LAMP. So are we sort of thinking October, November production coming through?
We certainly think that it's going to be within this half year. I think that the speed with which it comes out the other end comes down to the speed of the ramp up. And as I think I've said to everybody here previously, ramp up trajectory is inherently unpredictable. We have a number of scenarios. Under some of them, we ramp up really quickly and efficiently, and under others, we find ourselves with some challenges to deal with along the way. One way or another, we expect we will be getting first production at the other end in the second quarter of this year. Yeah.
Great. Okay, that's good. And sorry to sort of go back to this question, but just in terms of the sort of preferential, in terms of the stockpiling, are you sort of preferentially stockpiling more NdPr, or is it other rare earths? Is there anything, I guess, you can give us in terms of the breakdown of that stockpiling?
Sure, it's NdPr and SEG, which is the heaviest compound. So the lanthanum and cerium, we will continue, and despite significant oversupply in China, we're pleased that lanthanum and cerium demand for our materials, particularly our sort of higher grade materials, has remained very strong. So, but we always have plenty of lanthanum and cerium, and it's really the NdPr and the SEG that will hold.
Yep. And that's probably going to be roughly 10% a quarter if you sort of take
maybe a bit
numbers going forward.
Maybe a little bit more. Yeah.
Okay, cool. And just finally, if I could squeeze one in, just on CapEx. Obviously, CapEx picked up a little bit this quarter. Just in terms of your overall guided sort of expenditure for Mount Weld and Kalgoorlie, I assume Kalgoorlie is mainly done, and it's just now focusing on Mount Weld. Just thinking, I guess, how you're approaching the remaining cash balance after you've completed the expansion at Mount Weld and those adjustments to LAMP. You've got a fairly robust cash balance there. Just sort of thinking about the strategy from how to best deploy that.
Sure, but we still have quite a lot of construction ahead of us as part of the growth plan. But yeah, so this year's cash is pretty much in almost exactly in line with sort of the guidance that we provided last year on CapEx, and it was for about 1.2 billion over the financial year just finished and the financial year ahead of us. And we haven't varied that. There can sometimes be a bit of movement between different projects, and certainly we won't know the final cost of Kalgoorlie until we've done all the variations. I think everyone on this call understands that that's part of projects. But the other thing is, so we'll sort of see that. So we get some pluses and minuses across, sort of across it, but the envelope that we've indicated, which is the 1.2 billion in capital over the 2-year period, remains current. We'll update that if we see that there's any significant change.
Great. I'll leave it there. Congratulations, and we'll speak to you soon.
Thanks.
Thank you for the questions. Our next question comes from the line of Reg Spencer from Canaccord. Please go ahead.
Thank you. Good morning, Amanda. I've had some connection issues, so these questions may have been asked already. But I was wondering whether you could provide some comments on what you expect the Kalgoorlie ramp-up profile to look like relative to your concentrate production from Mount Weld. And again, apologies if this has already been asked already.
So I'm not quite sure I understand the question. However, I think that the short answer is we won't have any disruption to the ramp-up schedule at Kalgoorlie based upon supply of con. So at Mount Weld, we have built a significant supply of con. We've done a first test of we'll now be moving that material in retainers. We've sent a container to Kalgoorlie and back and sort of tested its flowability and all of those sorts of things. So Mount Weld have built the stock which is required to ensure that we have no disruption to the Kalgoorlie ramp up from availability of raw material. The other thing which is sort of pretty exciting is that our silos of various of the raw materials required for startup have now got product in them. So, we've received and are storing the various different reagents and other chemicals used in the process. So that's another part of the commissioning, of course, but making sure that we've got that material on site. And as people would have seen, even with the fact that we've had to implement an LPG gas solution ahead of, resolving some pipeline gas issues, we've got the first fill of that occurred as well. So the site is, sort of progressively very well prepared for this, sort of final commissioning and startup. But, we remain cautious in making any statements about it because any ramp up is inherently unpredictable.
Okay, great, thanks. I guess my question was really more about where you would target capacity utilisation relative to your concentrate production from Mount Weld, noting that expansion there's still got a little bit of time to go. But I take your points, Amanda. Thanks for that. Maybe I'll follow up offline. My second question relates to rare earth market outlook. I think this is the first time you guys hadn't made mention of strong apparent demand in your quarterly for some time. While I note your earlier comments there about the longer term outlook, is there anything you can help us with on the short term outlook? We know that production quotas have increased earlier this year by a lot. We're expecting the Chinese to announce something more in August, perhaps, in relation to potential further quota increases. You mentioned in your report softer demand for magnets. Is there anything that yourself or Pol can help us with in the next 12-month outlook to give us some comfort around where we might expect pricing to go?
So we tried to get Pol to speak before and seemed to have troubles connecting. I'll try to give him another chance, but essentially, Reg, we're seeing it's a bit demand is different by application. So electric and hybrid vehicle demand continues to be strong, but we're seeing a bit, much softer, with some delays on projects and things like in the wind segment, and also in household applications. For example, things like new air conditioners and those sorts of things in China. But I don't know, Pol, are you back on? Are we able to hear you?
Yeah, I'm online. I don't know if you can hear me.
We can now.
I can.
Yes.
Thanks, Pol.
Well, I don't have anyway. The two factors is basically the production quotas of China will be released probably this coming months. And I would say again, in terms of demand, China, if the real estate industry recovers in China, then because this is the weakest segment, market segment, then the demand will be back on. So that are the two factors to look at: the general economic situation of China and which drives real estate. and the production quotas.
Okay. Well, I'll cheekily ask one last quick little question. Pol, would you expect China to deliver another production quota increase, and where does that sit relative to what we might think capacity utilisation to be in China?
I can't answer that. With a pure guess.
Yeah. Okay.
Sorry.
No problem. No worries. Thanks, Pol. Thanks, Amanda.
And whilst we've got you, Pol, because the earlier question about Paul's question about how much more do we think we can get out of the LAMP than sort of our current performance.
This is an interesting question. So provided we have clarity, of course, with the regulators in Malaysia, I think we have, of course, studied a lot on the industrial plan for LAMP. And I would say that overall, LAMP site's structure is fit for twice more production than what we have today. So that, of course, with investments, but debottlenecking kinds of investment could double the production in Kuantan if we wish to. After that, we talk about a new site. That's different stories and different economics, but that's the potential.
Okay, thank you.
Thank you for the questions. One moment for the next questions. Next on the line, we have the line for Al Harvey from JP Morgan. Please go ahead with your questions.
Good morning, Amanda. Just wanting to get a little bit better understanding of that ramp up and the sequencing between Cal coming online and Malaysia taking the product. So I guess you got to switch things off, the cracking and leaching off in 2024. I know you're not providing guidance just given difficulties ramping projects up, but you have talked about some scenarios there. So just trying to get a sense of the range of outcomes around the ramp up. So is it likely that we see things ramp up at Kalgoorlie from September? That kind of gets you up to 50% capacity that can then feed into Malaysia, or is it are you expecting it to be much faster or less fast? Just really trying to get a sense of what happens into calendar year 2024.
Well, yeah, look, Al, it is difficult. I think that as we look at our various scenarios, we can see ourselves with the potential for at least still a couple of months where we would have lower production. So let's say a quarter of lower production, where previously when we were looking at, sort of the 30 June deadline, we were looking at a quarter of no production. So that would be the difference that additional time in Malaysia has given us.
Great, thank you. And maybe if you could just expand a bit on next key milestones for the US facility. Are you going to get a study or anything like that on the project? Just wanted to know what to look out for.
Sorry, you just broke up. Are you going to get what?
Sorry, so for the Texas facility, just wanting to understand the next key milestones there. Will we get a study or, what should we look out for there?
Yes, we will have a more detailed study. Our team is actually working on that at present, and we will be able to provide additional information. But as I've indicated previously, we are constructing this plant in partnership with the US government, and so together we may, we certainly have to accommodate their view on what we disclose and at what times, but we will have a sort of a completed study which looks to all of the activities that need to be completed on that site in the relatively near future.
Great. And just finally, you might mentioned in the downstream part of the release, low hydrochloric acid availability for cerium and lanthanum production. Did say that demand had been pretty resilient for that product. So just wanted to get an understanding of, if that low availability has been resolved, and if that can kind of help you backfill some cash flows in the near term.
We're in a much better position as far as supply is concerned. In terms of its effect on, sort of cash flow outcomes, it's relatively moderate. It's improving as we're bringing even more, sort of higher spec materials to market, but it still remains that cerium and lanthanum materials are in oversupply. And so therefore, sort of the pricing for those remains pretty low. So it helps, but it won't make the difference compared to the material that we'll be choosing to hold as inventory on NdPr and SEG.
Yeah, sure. Makes sense. Thanks, Amanda.
Thank you.
Thank you for the questions. One moment for the next questions. Follow-up questions from the line of Paul Young of Goldman Sachs. Please go ahead.
Yeah, hi, Amanda. I've got a follow-up question on the downstream or refining capacity. I'm just trying to square that away, considering we have the CapEx, guided on Cal and Mount Weld. We don't have the CapEx estimate for the expansion from 7,000 tonnes to 12,500 tonnes of NdPr. Paul just mentioned that you've got installed sort of utilities and a good footprint at LAMP, so it's a very low cost brownfields expansion there, I presume. And the US, you've bedded down the site location, but still studying I presume the size of that refinery. So how do we think about first of all, what the size of US refinery is? Is it still 5,000 tonnes of total rare earths? And where will you expand, and what's the CapEx associated with the refinery piece?
Okay, so if we take the first in Kuantan, the capital that we expend in Kuantan is wholly dependent upon the resolution of discussions related to our license. And so, as Paul indicated, we have developed a plan, and it is orders of magnitude lower cost than anything else that we could invest in. And certainly within the 1.2 billion guidance that we've provided, we have some of that capacity up plan. About 50% of that capacity up plan is included within that number. So that gives you a sense really for how, sort of how efficient any increase in capacity in the LAMP is. But the decisions on what we invest and how we invest it in the LAMP will not be finalised until we have some of the current licence discussions that we're having complete. With respect to the US, we've got two components to that plant. One is the heavy rare earth separation facility, and the other is the lights. And together we expect that that's about 8,000 tonnes of separation capability. And we will, as I said, be providing some final work on that. The team's been working very diligently with our local engineering partner on updating all of our forecast costs in those areas, and also ensuring that we've got those costs fit for purpose with the site which has now been acquired.
Thanks, Amanda. That's great context and info. Just back on LAMP, as far as if you do decide to expand LAMP to whatever the number is, how long will it take to do engineering studies, and how long will it actually take to to complete that expansion? If you pulled the trigger, let's just say, for example, you get an extension in Malaysia, hypothetically, to run the cracking and leaching beyond 1st of January, and you do decide to commit to expanding LAMP, would it be ready in time to take the expanded material from Mount Weld, by say middle of 2025 calendar year?
We would expect it will precede the completion of the Mount Weld upgrade.
Great. Okay. Thanks, Amanda. That's great.
Thank you for the questions. We also have another follow-up questions from Dim Ariyasinghe from UBS. Please go ahead.
Thanks, Amanda. Just one more on costs. So I know you haven't guided too much on this, but how can you give us a relative guide on how the cost base increases? Just assuming you've got the apatite in, you've got Cal online, how that potentially changes the cost base, given where the NdPr price is. I think it's maybe just pertinent to revisit what you've said about this.
Sure. What can I say? Australia is a more expensive place to do business than Malaysia. Oh gosh, that's a significant insight for all the analysts on the call, isn't it? So there are elements for operations in Kalgoorlie which clearly are challenging for us. But having said that, we also see opportunities for us to be able to improve efficiencies on a number of the cost elements in Kalgoorlie. I think under our new scenario with our 3 sites, that it will take us some time to really optimise the efficiency across the 3 sites. And then when we have the 4th come online at US, that will be another challenge. Landside logistics is probably the most significant sort of difference that we're talking about, because a lot of the cost disadvantage at Kalgoorlie we've engineered out by engineering sort of scale into the facility. And I think everyone would know that when you've got sort of extra scale, you do get sort of cost improvements. So yeah, we do have some cost challenges, but certainly, as this result shows, we are able still to be successful even when the price is not at those very attractive levels that it was a year ago.
Yep. Cool. Okay. Thank you.
Thank you for the questions. We have another follow-up questions from Regan Burrows from Bell Potter. Please go ahead.
Thank you. Yeah, apologies for the follow-up question, but now that we've got Paul on the line, just potentially following up from Reg's question on production quotas earlier, just trying to get sort of my head around, I guess, the internal production in China. I think, Paul, you've mentioned previously where they're operating in terms of the cost curve. Do you take a view on, I guess, are these sort of internal producers within China, are some of them coming under pressure at these levels, and where's the cost curve currently?
Well, the cost curve, the competitiveness of Chinese producers vary from one to another, so it would take too much time for me to comment on each of them. And again, it wouldn't make so much sense that I discuss my guess about the production quotas. And I haven't been to China for a while, but my team has. I think what is important to understand is that Chinese are very confident on the demand increase. They are all investing in additional capacities, and you have to give them this. They are not stupid people, and they love money, so they don't spend money for the pleasure of spending it. So that means that, yes, we are going through a weak demand period at the moment. But the long-term strategy is really quite enthusiastic on the Chinese side, I think. I cannot comment on the cost of each Chinese producer.
Yeah, I guess just trying to figure out how much lower prices can go if they, and I guess their internal thinking, but I guess, yeah.
Well, we've been quite stable for a while, around $60, huh? VAT excluded.
Yep. No, thank you for that. I appreciate it.
Thank you for the questions. That's the end of the Q&A sessions. I'd like to hand the call back to Amanda for closing remarks.
Terrific. Thank you so much. Once again, thanks everybody for joining us today. Analysts, any follow-up questions? I know that Daniel's sitting eagerly by his phone waiting for any of those. No, he's very happy to take any further questions. And I look forward to speaking with you all again as we release our annual results later this month. Or next month. It's the last day of July, isn't it? Yeah. Okay, so thanks all. Talk to you soon. Bye.